Hello, everybody. I'm glad to introduce the next keynote speaker. I think in some of the previous talks of today, we've heard a little bit about various use cases of blockchain and crypto and so on. And I'm coming back to one of the memes or ironies that I mentioned earlier this morning that is used when people speak about blockchain being, a solution in search of a problem. On that note, I think it's very appropriate that we have here Jens Glaso, who is going to speak about enhancing financial inclusion, which is supposed to be one of the key features that can be facilitated via blockchain. And if I'm to look at the marketing wording on your website, I think on Spenn Technology's website, I think you're looking to bank the 1.7 billion unbanked people in the world. So we're very interested to hear how you're going to do that.
All right, thank you. Well, wow, it's so cool to be here. It's interesting to have heard all the other keynote speakers, and in my daily life, you talk to people that believes in Bitcoin and Ethereum and all these kind of coins, etc., etc. And you have these decentralized and you have the centralized. And suddenly you're here and you feel like you're part of a family, which is pretty cool because suddenly you can feel like home. And now I can be able to tell you a little bit about what we're doing and my view of things. So yeah, I could talk about a lot of things. And I'm going to try and capture it as much as absolutely possible. Now, where I want to start is with Luna. So the question is, did Luna fail, or did it actually show us that the regulated crypto is the future? I think that the collapse of Luna points us in a direction to a brighter crypto future. I believe that crypto is the future of But before I move further into this, let me briefly introduce myself. I'm the CEO and also the founder of Spenn. It's a publicly listed company on Nasdaq in Copenhagen. So Spenn, in short, is a company that has created a mobile banking solution, a mobile banking app, you could say, primarily in markets where the ratio of unbanked is extremely high. Primarily, we're talking about markets where only 20 to 30% has a bank account. Now, what we have done, the essence of what we have done, is simply to create a solution for everyone, but also for the unbanked. A solution where people actually can download an app, and by having this app and by actually doing also the KYC, which again is approved by the central banks, and by downloading this app, we are solving one of the problems that James were just talking about, saying that the financial institutions don't find it profitable. The problem is today is that with 1.7 billion people, or more actually, being outside the financial system, that is a problem. So what we are doing is by giving them a solution where they can use this solution, and when they start to use this app, they generate deposit. And when they generate deposit, we generate that to the banks. Because the banks is operating in a market where only 20 to 30% has a bank account, where do they get the money from? It's extremely expensive for them to get access to capital. Now suddenly, we can put all these people into play, and they are the ones generating the capital to the banks. And by such, we can provide this capital much cheaper than the bank actually can do on their own. And since the bank is paying us, we can then give this service for free to the people. We have today banked approximately 1.2 million people that today is using this as a preferred solutions for bill pays and other preferred solutions or banking features. We are a stablecoin. And I'm going to talk a little bit more about stablecoins, but we are a stablecoin. What we have done is creating a digital currency, and this is the only way you can create a digital currency, is to create a digital currency and back it by the national currency one-to-one. When we launched this in 2018 in Rwanda, in Africa, we were the first company digitizing the national currency in that country. Not euro, not digital one, etc. So this is a little bit about my background and what we're doing. We are today in 6 countries, and both in Africa and Asia. Let me see. If we are to learn anything from the Luna, I think that is the crypto has come to stay. We all know that the Luna collapsed a couple of weeks ago, and understanders will hoover and will say, what did I say? This is completely the wrong angle. What is key? What we have to do now is to make sure we take advantage of what happened with that collapse. That collapse only shows us the way. That is for the benefit of what we believe in, because it will focus on regulation. We need regulation. For those people who doesn't believe in regulation, well, you can go to one of our markets and you can see how a non-regulated market works. It doesn't. There's nothing wrong with regulation. Regulation only helps you. It's the people that's the problem. The corruption is not in the regulation. The corruption is the people. Well, anyway, so what we saw with Luna, many felt that, okay, this is the proof that this won't work. To me, it shows me what we are doing and what I'm spending my everyday life on is a proof that I'm spending my time wisely. So let me first state, the idea behind the so-called stable coins is a good idea. However, it requires that the central banks plays along because we need their support and it needs to be involved because the average people that is using these kind of services, the average people that we are talking about, the people that will benefit the most from the crypto or the digitization is the people that has the least. People that maybe have a salary which is, at least in our markets, it's maybe $100, $120. And still this is below where they have to pay a tax. So the tax is not a problem. But the point here is that, and the problem occurs, and the reason why it's a problem for these people and for the regulation is because it's also being used a lot to remittance. The market today, the remittance market today is around $1.8 billion to sub-Saharan Africa, just to talk about that market for first place. So $1.8 billion is being remitted to that market every year. Last year, I think we were around a couple of $100 million of that was done by crypto. Now we are at 400. $400 million of that 1.8 is used by crypto. But the problem is this. What happens to the money being sent to Africa? Where are they ending up? Can you go to the bank and deposit it into your bank account? No, you cannot. And this is a big problem because this money is ending up in the black market. Because what they are forced to do when they receive the capital, if they cannot prove the origin of capital, they have to go to an agent on the street. And this is not unique. This probably is happening here as well. You have to go to the street, go to a person who is willing to exchange whatever crypto you're holding. And it doesn't really matter what it is, but you're holding something that you can exchange into the local currency. And again, the people that has the least is the one that's being ripped off. That's the fact. Now, so what we have done is we have come up with a solution where there's a two-track to it. We have the remittance part, but we also have the people living in these markets. The people living in developing parts of the world, they are constantly searching for elements, like us, but they're constantly searching for investment tools. Where can I invest my money? Where is my way out of the poverty? Do I buy a lottery ticket? Do I buy this or that? Yes, they do buy lottery, by all means. It's a big thing. But crypto is also growing. And I know this by fact because Spenn is a tool. It's a mobile banking solution. We are a payment solution for e-commerce companies, and other crypto companies is connected to Spenn, so we know the traffic. We see how it grows. The point here is that doing this in a way where we can control the identity of the people. Because when you register with Spenn, you have to do your KYC, you have to do your AML. We are doing this in our app in a regulated way. Spenn is is under regulation. We are a tech provider to the banks where we help them to digitize the national currency. That's what we do. Now, so when they register, they have to fill in their name and numbers and whatever requirements is there to be compliant with the regulation in that country. You do that when you do the register. When you have done that, suddenly you have done your KYC. Boom, you're in place. Now, the people who want to take their hard-earned money to invest that into crypto, they can do that. They can buy, they can sell. But when they go to the store, can they then use the crypto? They can. Because what we have done is that you go with the mobile app, it's a tap and pay solution, you go to the store, we have 30,000 agents, we have 12,000 merchants in our markets. You can go to all these places, you can go to gas stations, you can go to ShopRite in Zambia, which is a big food chain, you can go to Uber, etc., and you can pay with your crypto. Well, what's happening in the background is that the crypto is being changed into the local currency. So we're using the local fiat as a rail. And this is the only way to help the government to get control of something that I don't have control of today, because they don't. When all those hundreds of millions of dollars is ending up in the black market, how does the government get control? They don't. They lose control of their own capital, or sorry, their own cash income, tax income, VAT, etc., etc. So this is what we do. The other path is for the expats that wants to send money back home or whoever else. Now, here's the same problem. If you don't have the proof of origin of capital, then it will end up in the black market. But if you can go to an exchange, therefore, we are also cooperating with an exchange in Europe, where also Spenn has a stake, where all the people, of course, has to be identified, KYC, AML, etc., etc. So in other words, when they are buying the crypto that they're going to use for remittance, we have the proof of origin. And what do we have on the other side? The KYC and AML. In other words, when they receive the money in Africa, then they can take it directly into their bank account, because Spenn is a bank account. They don't have to go to that agent, and they can do this at zero cost. Now, as I said, there's so many things to talk about, but what has been said, and also the growth, I mean, people before me has touched upon it, but sorry. Internet grew from 1990 till 2000 with 63% year over year. In 1997, James was touching on it. There was 140 million users using internet. Now the rest of the story we know. Everyone is using it. But now, crypto is growing with 113% a year. Twice the speed of internet. That's the fact. The adoption is there. Last year, if I'm not completely wrong, I think it was 120 million or something using it. Now it's 300 million. We're expecting to have 600 with the end of the year, more than 1 billion in over a year's time. Internet was the biggest digital change that we have witnessed in this world's history. Now, what we are witnessing right now is the biggest financial change of the world. That's what's happening. Now, do we then think that crypto will go away, the digitization? Absolutely not. At least I don't. It has come too far. Let me see. Yeah. So in other words, I think that cryptocurrency, or digitization, of course, but the cryptocurrency is here to stay. It's just a matter of how we're doing it. CBDC, etc., yes, it will be. I think there is... We've been touching upon it while we've been here, and how the system will work. I'm pretty sure that, and it has been said, if the central bank is trying to regulate, if they are trying to create a CBDC that has the fluctuation that, for example, Bitcoin has, they will fail. Sorry, but that won't work. Therefore, you will have different layers. Let's say you have an A coin, which is the one that can fluctuate. Then you have a B coin that can be the regulated one that can have inflation and deflation. Then you have a C coin, where the bank comes into play. Because what I have seen is that the banks has to and will take a major role in this. I've been reading strategy documents to all these banks that we've been partnering with. And I know the fact that they have seen, suddenly, that they actually can play a major role in this space, which is extremely interesting. Because crypto cannot collect money. Crypto cannot do credit check. Crypto cannot lend out money without credit scoring, etc., etc. We need the banks. The banks will come in and play a major role. They will come in and they can issue their own coins. After all, central banks can be a hassle for the bank. I'm not talking about the regulation. It has to be regulated. But they can create their own capital, which they can lend out. Exactly how it works today. When you go to the bank and you take a loan, they print up the money. But you have to go to the central bank. Now the bank can actually do this on their own by creating their own stablecoin, national digital currency. But the central bank, of course, have to be there to regulate. But this would generate more business for the banks. It would generate more revenue to the government. And the central bank will still be there. Like it is now, we have all these different currencies. Africa is 52 countries. Do we need 52 different currencies? I don't know. Probably don't think so. I think you will see there will be a few big drivers. We have the dollar, and we have the euro, we have other currencies, etc. I think you will see, and it clearly is there, where you probably will see dollar and a couple of few others will be the main driver backing the digital currency. And if you take Bitcoin as an example, we've also been touching upon this inflation. It's a problem. But if you take Bitcoin as a specific example, where they have a limit of 21 million coins, what will happen to that coin when you have inflation if it's backed by the dollar? Because that's literally what it is. It's reflected to the currency price of dollar today. It's not backed, but it's reflected to the currency. Of course, the value will increase because there is a limitation. You won't have the inflation and deflation. So I think that crypto simply is dependent on some of the regulation. So the core of Luna was good. The problem with so-called stablecoins is that they are not supported by any bank, which in turn was so what was supposed to be backed was not there, and that was the problem. They used an algorithm. It was not physically backed by a currency, like the dollar was in the beginning from 1879, I think it was, or 71, till 1979, I think it is. Dollar was physically backed by gold. But of course, they removed that because they saw that the gold couldn't hold up the price, so they were risking deflation. Now, we all trust, or the people who use dollar trust dollar. The people who lives in Rwanda trust Rwandan franc. The people who lives in Zambia believes in Zambian kwacha because that's what they're used to. When you're going to digitize this, you have to simplify it so the people can access it easily. That's what we are doing. We are the local currency. That's it, one-to-one, backed by the physical cash in the bank. So whatever money you have on your phone is backed by physical cash in a bank. One-to-one, 100% at any given time. There is no deviation from that. When I started the, how much time do I have left? A few minutes? I lost quite a bit of control. Oh, perfect. Yes. So, talking about financial inclusion, what we have done is solve the biggest issue within financial inclusion by utilizing the blockchain technology. And as we all know, blockchain is nothing scary. It's just a digital accounting system, keeping track of who owns what. That's what we use. That's how we can make this efficient, how we can make it safe and secure, backing it. And again, 1.7 billion people on this planet is without a bank account. Half of the population on this planet is outside the financial system. Half of the population in adult age. Now, going back to our markets in Africa, sub-Saharan Africa, $380 billion is still in cash, physical in cash. And this is a huge problem. You see I write 2 billion. We talk a little bit about 1.7, 1.2, but it's somewhere in between. But the problem here is that when you have to rely on cash, the cash doesn't work for you. You can relate this to a lot of things, but cash makes it unproductive. The banks has a high cost handling cash. People are today using cash for salary. What we have done with our system, our full ecosystem of the mobile banking solution, is that people can pay out salary to the Spenn account. You can go online, you can buy whatever you want. Online shopping, e-commerce is growing massively in the African countries. But the goods you're buying is being sent to the post office or wherever you can pick it up. And if you haven't prepaid, you risk that it will end up there, or it will be sent back, or they will look at it and will damage it, and you send it back. There's a lot of losses. Now, suddenly, when you can actually pay for that goods in advance, which you can with our system, that's good. Now, the point here is, with all the cash that is out in the market, is being unproductive. This is also a problem for the overpopulation. Just imagine, why do these people get so many kids? It's because they have to take care of their own retirement plan. You cannot put this money into play when you have it in cash. You have to put it in a timber box. And that's the problem. Trust me, I've been working with United Nations. I've personally been to Kakuma, a refugee camp, seeing how this is being done. It's terrible. It moves you nowhere. But allowing them to come into the digital space, allowing them to actually invest in Bitcoin or other financial services, savings accounts, which we have. For the first time, our people can now actually put money into a savings account and get 4% interest on their capital, or 3.5%. It's 3.5% and 4%, it varies which country you're talking about. But anyway, 3.5% to 4%. For the first time, this is about dignity and self-esteem. This is not only about a solution, it's also about me as a person. So the fact that these people now can be able to plan their future by investing this money into certain, whatever it may be, makes them able to create a plan for what will come in the future. And that would also have an effect on overpopulation. Yeah. I actually want to talk a little bit more about the remittance part, but I think I covered it the most. I think where we are now is that it's substantial important for us to take responsibility. And someone said here earlier today, we cannot do it alone, we have to do it together. I think creating a world where everyone has an equal financial opportunity is difficult to do today because the cost for the bank, and this is why there are so many people outside the financial system, the cost for the bank to open and maintain a bank account is on average somewhere between $35 and $65 in our markets. In Europe, it's much higher. We're talking about a couple of hundred. US, America, United States has 40 million people without a bank account. I don't know if you knew. But the cost of having this bank account is what keeps them outside. Because these people don't have enough money, they are becoming their own enemies. But allowing them onto a tool on something they all have, mobile phones. 90% has a mobile phone. 40 to 60, depending on which market we're talking about, maybe more, if you're in the suburbs, etc., has a smartphone. They have an access to this. We can give it to them. We just have to sort a few things. KYC, AML has to be in place, because if not, they will end up in the black market again. And they will lose again. Allowing them to interact with me and you gives them power. It helps me and it helps them. Because the more people there are there, the better it will be. I can do all my business. I can pay out my salary digitized. I can interact with these people exactly how you want financially. I can go and pay my taxi. And let me tell you this. We, as I said, we have this Connect service, this e-commerce solution. We have a taxi company. 22,000 drivers on a moped and 3,000 in cars. They don't have enough cash when they start their day to actually do their business. This is how it is. What we did was that we created a lending product where people were allowed to actually borrow money for free for a certain number of days. The bank thought I was completely crazy when I suggested this, because people here talked about peer-to-peer lending for free. And the bank said, well, why should we lend out for free? So I said, what is your risk of the capital being paid back after a few days? It's none. Your risk is on the capital that's not being paid back. So by allowing this tool, suddenly these drivers and many other businesses can actually start their day taking this credit. Of course, they have to be credit approved. Of course, they're already on Spenn, and we know the KYC, we know their AML. But not only are they now able to take the first step out of the cash society, but they are also able to take the first step towards the middle class because we are building their data. We are building the data for them. So when they have this record, they can go to the bank and they can potentially take a bigger loan. Well, this is an opportunity to do something about it. And I think that our opportunity is to strengthen what will be the biggest digital financial change in history. And let's seize this opportunity because the world simply needs it. Thank you. Any questions?
That was precisely my point. If there are any questions in the room, please.
This guy here.
So I was about to ask you why don't the banks do the banking of the unbanked? You already responded that. And now comes the question, why, I don't know, maybe why don't commercial banks come up with a... Why don't commercial banks come up with a cheaper solution for opening and entertaining new bank accounts and doing this on their own? Why there isn't such a solution right now? I mean, I guess with a digital bank like Revolut, you can do that pretty easily with the internet connection and have yourself some form of digital money.
Yes, there is a lot of things you can do if you have a bank account, number one. So your question goes to why doesn't the bank come up with a system where they actually can do this cheaper? First of all, what we see is a lot of banks is running on a manual system. They have to build what we have invested a lot of money into, hundreds of millions in my currency. And for a bank simply to build a similar system and to run the full ecosystem, they simply don't find it profitable. And what we see around the world is the bank more and more focus on the core essence of a bank system, which is to get capital cheap and let it out more expensive, which it should be. Because I think that we as fintech world are in a much better position to actually help the banks coming up with more efficient services. I'm not saying that Spenn is the solution for everyone, but I think definitely we are one of the solutions in our markets. And I think simply it's about focus. And Revolut, for example, as you mentioned, is a very interesting company, but if they're gonna establish themselves in our market, what is it that they need to do? They need to solve the issue with getting an identity. Now we have 1.2 million people that is on our platform. It would probably be more natural for them to come and knock on our door and say, hey, can we run on your identity? Which we would say, yes, of course, not a problem. As long as it brings value to the end user. Because the reason why Revolut can run is because there is they're running on some existing identity system, like what we have in Norway, Bank ID, we call it. It's an digital identity we have. So, yeah, I think that the position that we are also now taking, where we can allow other players to come on board because they can actually run on our identity, is crucial. Was that an answer to your question? Any other questions?
What do you think about the decision of the Central African Republic to make Bitcoin official currency?
I think that what we have seen in El Salvador is something that we probably can relate to in that question. I think it's extremely interesting. I don't necessarily think that you need to have, or the people don't want to have that currency as their main currency. People in Central Republic is not necessarily chasing a new currency. They simply want to hold something that is user-friendly to them, that is easy to use. And for now, that's still a local currency. But if the government would allow that currency and regulate it, so as I was talking about, when I receive, for example, whatever currency, or Bitcoin in this case that you said, that I can go to the bank and put it in there so I can be part of that financial system, that I can be included and I can make the money work for me. I think that's the key. I don't even think that El Salvador as is, just allowing it to run necessarily is, well, I see challenges there. What I do see is if you do regulate it, and as we have done in our markets, and how we are interacting with the governments, is that we are always routing it through the fiat currency. And by doing that, the government gets control of the VAT, the AML, the KYC, the AML, and the proof of origin. I think that is key, because if not, they will lose the element of taxing or potential tax income. So I think it's positive. I don't think it's any issue, because you can run on the remittance rail as long as you have the proof of origin. Because it's just a tool. The Bitcoin and Ethereum and all the other whatever you want to use, whatever coin, it doesn't matter what it is, as long as you can convert it, you can exchange it. And when you exchange it into the local currency, and that's where you give the government control. My opinion. Yeah.
Just one point. I mean, an important point for these countries is they don't have a local currency.
Sorry?
These countries don't have a local currency. They have a franc.
Yep.
They have a currency controlled by francs.
Yeah.
So this is another point. I think that's quite important, because for them this is some kind of liberation.
Yeah.
Yeah.
But it doesn't really matter what they have. My opinion is that you need to be able, whatever you are allowing, what is important? I think it's a right step in the right direction, but you need to be able to convert it into, or you can simply just send it as well, because you know it's digital, so it's not a problem to track it. Whatever you are paid in, it's not a problem. But I think that the governments needs to be able to capture somehow a way to earn their taxes and et cetera, et cetera. And I said, this is not a problem for the people that has the least, because they don't pay tax to start with anyway. So it's not a problem, but I think for the bigger money, it's important. So as long as they capture a system where they actually can be part of whatever they have today is important. This is how I see it.
I think we're out of questions. Thank you very, very much. And one big round of applause for